Good morning, everybody. I hope you all had a good weekend and are now looking forward to the week ahead. So if we go straight and have a look at what happened in the markets last week, we saw the Dow was up 0.8%, the Nasdaq was up 1.2%, the FTSE was up 3%, the Nikkei was down 1.3%, Shanghai up 1%, and the DAX in Germany was up 3.4%. So we saw the biggest positive moves in the European markets with Germany and the FTSE having its biggest one-week gain since the beginning of July. The bundle of four, Amazon, Microsoft, Google and Facebook, would have made you 1.3% last week, again slightly outdoing a Nasdaq tracker, which would have done you 1.2%. So on the currency side of things, we're continuing to see a strong US dollar, and we saw the US dollar improve from 130 to 129 against the British pound. We also saw it up marginally against the euro from 111 to 112. The Japanese yen, which remains a ridiculously strong currency, stayed at 101. We've seen the Japanese yen gain 16% this year against a strong US dollar. And obviously with the issue that's happened with the British pound recently, had you done a pound versus yen, you'd have seen your pound go from buying 177 Japanese yen at the beginning of the year to 130 now, a fall of 26%. So this just shows the volatility in the currency markets and how, there's definitely money to be made out there if you want to play the game, but at the same time it's certainly a risky one with those sort of levels of volatility involved. So the major story last week, I suppose, was the Fed once again leaving interest rates where they are. I think I mentioned in previous briefings that is what I anticipated. There's still inflation below the target of 2%, which they will want before they start thinking about an interest rate rise. There's also the elections coming up, which is going to have an impact on the market in some way or another, and I think they want to see what happens there before making a decision. Again, some people are talking about a December rate rise, others, are more dovish and think it's going to be even further away. It's interesting, actually. I mean, a lot of people ask me about the interest rate situation, and of course, you have a country like Japan, which has, since the mid-90s, not been paying anything on its bank interest rates. So the fact that we've had a period of 8 years in Europe and the US where we're not getting any interest on our money in the bank, the Japanese had that for 15 years before. So can it be sustained? Well, the simple answer is yes. You have to be a bit more nimble with your money and find other ways to invest it, because I personally can't see a way out of this in the short term. I don't think you're going to be getting any interest in the bank in the near future, that's for sure. Another story that I came across last week was about one of my favourite fund managers, Terry Smith. I suppose part of me was a little bit surprised that not every single fund manager out there has the same attitude as him, whereby he invests his own money in his own fund. I mean, Terry's got £230 million of his own money invested in the Fundsmith equity fund. Now, I think it's obviously essential to have, put your money where your mouth is, so to speak. And whenever I advise clients on investments and on funds, most of the time I've got money in there myself, or I've got money in there invested for my family. You've got to believe in what you do, and you've got to, as I say, prove that by having some skin in the game, as Terry calls it. And I'd be disappointed if I found out that other fund managers that I use don't have the same attitude. Of course, not everybody should have everything in the stock market. You need to have a little bit of property, even a little bit of cash, even though it's not earning you a great deal of money. And of course, people have business. People like to invest in their own businesses. People may want to back other friends doing something, whatever it may be. But at the same time, having some exposure to the stock market is important. And I think if you're in the game like I am, it's also important to be able to, back up what you offer your clients with your own money, so to speak. So we won't say too much more about that. Move swiftly along. In the sporting front, there wasn't a great deal that happened this weekend. Manchester City looked fantastic on the football. 10 wins out of 10 for Pep Guardiola, which is terrific. And just to finish with, we're going to mention a quote from Warren Buffett. I know I spoke about diversification before, and it's important to have some diversification, of course, in different areas, but not too wide when it comes to the stock market. And one of Buffett's comments is that wide diversification is only required when investors do not know what they're doing. What that basically means is you can be so diversified, like a lot of these pension funds are, that you leave very little margin for gain. Anyway, have a good week. Anything you need, let me know. Cheers, bye.